Bitcoin and the crypto market have been under heavy pressure lately, and everyone wants answers. Why did the price drop? What's holding it down? And most importantly, what comes next? Today I'm breaking down the data, the charts, and the sentiment shift that could define the next big move. Stay until the end because this isn't just about price, it's about timing, psychology, and strategy. If you're new here, make sure to subscribe and hit the bell so you don't miss what's coming next. Let's jump right in. Looking at Bitcoin's recent price action, one thing is clear: the $95K region has turned into a battlefield. We're sitting just above it, but without strength. No breakout, no clean reversal. That tells us something: the market is still weak in the short term. Zoom out, and you'll see a downward channel that has been forming for weeks. In pure technical terms, that means we fell, we're consolidating, and there's still a real possibility of falling again. There's a strong support level around $88,500. I'm not saying Bitcoin will crash straight down to it, but we're still inside a bearish structure right now. Even so, long term, I remain bullish. Every dip still looks like an opportunity. My opinion? The real high of this cycle is more likely to happen in 2026, not before. That's just my market view, not financial advice. Ethereum is moving sideways, a bit of strength, but no real momentum. The major resistance sits at $3,264. Same story for Solana, stable, but capped at $149 for now. Meanwhile, the stock market has recovered stronger than crypto. Why? Because stocks have liquidity backing them, a positive narrative, and institutional flow. Crypto, on the other hand, just went through a major liquidation event, and that changes everything. We saw more than $1 billion in leverage positions wiped out in hours multiple times. When people get liquidated like that, they don't jump right back in. Markets need time to heal. That's why I'm not expecting a V-shaped recovery. For my own strategy, I avoid leverage. I accumulate. I focus long term. Some traders use bots or automated strategies. That's fine. What matters is knowing what you're doing and keeping emotions out of it. Now here's the big shift. Something structural happened to crypto. Even with positive global conditions, rate cuts coming, gold doing well, liquidity improving, Bitcoin didn't move with strength. Why? Because big players took damage. Funds, market makers, whales got liquidated. When that happens, it changes the entire rhythm of the cycle. We also lost Bitcoin's correlation with gold. Gold held strong. Bitcoin didn't. Stocks climbed. Bitcoin stayed weak. This shows the crash wasn't global, it was specific to crypto. Thomas Lee from Fundstrat suggests that big players may still be trying to squeeze weak hands before the next expansion. Short-term pain, yes, but it doesn't change the positive long-term structure. Heavy checkmark Wall Street exposure is real. Heavy checkmark ETFs changed everything. Heavy checkmark institutional money isn't leaving. Heavy checkmark the market today is not 2017 or even 2021. And here's something most people missed. Everyone was expecting a 2025 peak because of the 4-year cycle. So what did traders do? They started selling early. The cycle may have shifted forward, which makes 2026 a much more interesting year. There could still be a big liquidation event ahead, yes. But I believe the biggest move is still coming. One more thing, keep an eye on Nvidia this week. Their earnings can shake global markets. And even though we're heading toward a death cross, historically, Bitcoin has still pumped afterward if we're in a macro bull phase. For now, my plan stays simple. No leverage. Buy dips. Eyes on 2026. Thanks for watching. Drop your thoughts in the comments, and I'll see you in the next one. Rocket!